Could Glass-Steagall be reinstated? Finance explained. Could the Glass-Steagall Act be reinstated? This question has been a hot topic in financial discussions for years. To understand this, we first need to look at what the Glass-Steagall Act was all about. Originally enacted during the Great Depression, this law created a clear division between commercial banking and investment banking. Commercial banks were responsible for taking deposits and making loans, while investment banks focused on securities underwriting and trading. This separation aimed to reduce risky practices by banks. In 1999, the Gramm-Leach-Bliley Act largely repealed the Glass-Steagall Act. This allowed financial institutions to combine both commercial and investment banking activities. Since then, many have raised concerns about the risks this combination poses to the financial system. Now, can Glass-Steagall be brought back? Legally, yes. Congress has the power to pass new legislation that would restore the separation of these banking functions. In fact, there have been several proposals in recent years aimed at reinstating Glass-Steagall. For instance, the 21st Century Glass-Steagall Act has been introduced in the Senate and has gained bipartisan support. Some state legislatures have even passed resolutions urging Congress to consider bringing back these regulations. The motivation behind these efforts often stems from the financial crisis of 2008. Critics argue that the repeal of Glass-Steagall contributed to risky behaviors by large financial institutions. They believe that reinstating the act could help reduce speculative activities and prevent future financial disasters. However, the debate is not one-sided. Opponents of reinstating Glass-Steagall argue that many of the original restrictions still exist in some from undercurrent regulations, like those in the Dodd-Frank Act. They also contend that reinstating Glass-Steagall could limit financial institutions' ability to diversify risk. This could potentially make them more vulnerable to failures. Additionally, they point out that today's financial system is more complex than it was back then. Simply reinstating old rules might impose high costs on banks and their customers without effectively addressing modern risks. While Congress can indeed reinstate the Glass-Steagall Act, the ongoing debate centers on whether doing so would actually strengthen financial stability or create new challenges. Understanding this issue involves looking at the historical role of Glass-Steagall, the reasons for its repeal, and how current regulations compare to the original act. The discussion reflects the ongoing tensions in financial regulation between preventing risky behavior and allowing financial innovation.